I'm here at the New York Stock Exchange at the beginning of a very busy trading week. We have economic data, earnings, central bank announcements, and of course, politics are taking center stage. So joining me now is Peter Cardillo of First Standard Financial. Peter, thanks for joining me today.
Good to be back.
Well, we have a lot going on this week in terms of data, earnings, as well as central bank meetings. But first and foremost, I want to ask you about the developments regarding the presidential election. We only have a handful of days until next Tuesday, so how important are the latest developments?
I think they're very important. And I think this is a recipe of a market of uncertainties. And whatever the outcome of the elections is, I think we're going to get into a period of uncertainties because, in effect, what we're seeing here is some potential problems down the road if Clinton should win. And then, of course, we're going to see economic and political uncertainties arise if Trump should win. So I think it's sort of like a no-win situation for the market right now. And I think this just creates an atmosphere of great uncertainties.
And speaking of uncertainty, in every market we have a lot going on. What do you make of the latest earnings and the growth outlook?
I think, the latest earnings for the most part are good. I think we're going to get a fairly good report card in terms of third quarter earnings. In terms of growth, we had a nice surprise in the third quarter gross domestic product. We saw the economy grow just a shade under 3%. Now, of course, there were special factors there, but I think that this quarter may not match almost 3%, but I think we could probably see growth come in around 2.25%. And I say that because I think it's going to be the consumer who's going to show greater strength in the last quarter of the year as opposed to the first, second, and of course the last quarter.
And Peter, we will be getting that jobs report after the Fed meeting, which will take place tomorrow and Wednesday. Now, we all know that a rate change isn't expected, especially ahead of next week's election. But what kind of trading action do you expect ahead of next Tuesday?
Again, I think, we're probably going to see a week where the market doesn't do very much. If we're lucky, we get a plus day, and then we take maybe two steps backward. As you can see, the market is up today, but it's not really showing any signs of strong energy at this time. And as far as the FMOC is concerned, certainly they're not going to raise rates this week. They'll wait and see the developments of the election. And again, we've been forecasting for a rate hike of 25 basis points in December, and I'm going to stick to that prediction. And in terms of the jobs report this week, I think we're looking at a creation of 173,000 new jobs with the unemployment rate staying at 5%, which basically means that, where the labor market remains strong, and that's another plus for economic activity.